Hello, and welcome to the Everyday Business Problems Podcast. I'm your host, Dave Crysler. Each episode, we talk to business leaders and subject matter experts to learn about the challenges they've overcome and the challenges they still face. You'll hear fresh insights, real talk, and get inspiration to grow your business. Hey, everybody, and thanks for joining me on another episode of the Everyday Business Problems Podcast. I'm excited to welcome Josh Notes to the podcast today. Josh is a serial entrepreneur, CFO, and dealmaker, who provides clarity through financial storytelling and improves his clients' businesses by forecasting what comes next and how to play it. Josh, thanks so much for coming on the podcast today, man.
Yep. You are welcome, and thank you for having me and inviting me to meet your audience.
Yeah, man, I'm excited to get into this one with you today. We've had a lot of really good conversations up to this point, and I think there'll be a lot of value in terms of kind of unpacking for folks really the connection between our two worlds, right? The financial world, the operations world, how we can not just collaborate, right, to build better systems, but ultimately, kind of inform each other of what's going on to, drive sustainable growth for the business. So, would love to just kind of understand, you say you're a serial entrepreneur. I know you've been doing a bunch of other things. Would love to maybe just get a little bit of backstory for folks that are out there, how you came to be in the position that you are today.
Okay, I'll give the Genesis story. Grew up in a household of what I would call entrepreneurial spirits. My father was a software engineer in Silicon Valley in like the late 70s, so really early. And my mom was a women's health professional, but did it in a way that basically sometimes she wasn't going to get paid. So there was ups and downs, but the one thing that was consistent was this: hey, go make your dent in the world and take risks and bring value to other folks in something that you know and love. And so I followed in those footsteps. Had early funny neighborhood businesses in my teenage years, and then by the time I was going into college and actually went to a business school, I had already started a real estate investment fund and started investing in dilapidated real estate in Baltimore City, which taught me a lot about neighborhoods, communities, finance, and how much change you actually can bring to a specific market or environment. So that was kind of the genesis, but that led me into the energy sector. Had a good run there, had some good wins, and also some pretty tough losses. And so, anyways, that all rebooted about 10 years ago, where I started a fractional CFO business as well as an energy development company. And those two things now pretty much, besides family, take up my life.
I love it. I think one of the things that makes you unique is the fact that you've done a variety of things kind of leading up to this, and so it's really easy to relate to business owners who have either acquired a business, in the kind of search aspect that we hear all about these days, or started something from nothing. Right? You've kind of got that well-rounded nature, and so it's easy for you to relate to the folks that are out there trying to grow their businesses, right?
Yeah, I've seen both angles, and I've heard from my mentors that both are the right way to go about it. And I think it depends. It depends on the industry. It depends on where you think your value is, if you're the entrepreneur that's starting it, and also kind of where your risk tolerance is. I think you can learn a heck of a lot more by bootstrapping, but you also can buy down your problems if you buy into some cash flow. So happy to chat more into that and different opportunities, or take the conversation in a different direction.
Yeah, definitely want to get into that. I think one of the things that'll kind of help, unpack and really get into some meat of this is, I like your phrase about financial storytelling and specifically around, cash flow, cash management. I know as myself kind of growing up in a business working for, a publicly traded company, one of the things we shockingly didn't get measured on was kind of, return on capital. at least at my level, right? And so I think moving from there to having your own business, you recognize very quickly just how important cash flow really is to the healthier business. So I love if you could kind of tie a couple of things together, like this idea around financial storytelling, kind of how that came to be, and really how it relates to the real work that you do around helping folks kind of understand, plan, and really move the needle when it comes to cash visibility.
Sure. Okay, so I'll kind of go back in history. You'll say roughly 20 years ago, I had this energy startup. We were out there in the recession of '08, and we kind of started this thing with an interest in real estate. We didn't have enough money to really, buy into any business. So we went down the line on a HUD, which is like the closing document for a real estate transaction. We were like, okay, can't get the mortgage because we don't have money for that. Can't be insurance. We don't have money for that. We kept going down, and we found energy was like fourth or fifth. And we're like, okay, we could start there. So that was literally, about as much work as we put into coming up with the business model on day one. And we went out and got some education in energy auditing and figured out how to get into these homes, use some scientific tools, infrared cameras, depressurization to really understand how this business of a home worked and how it used resources. And so, anyways, that business, kind of started off real slow, a couple $1,000 for the first couple of years, and then it ended up getting some utility programs and blew up. And we went from doing about $100,000 a year to $400,000 a year to $5 million in 3 years. And so I went from, being a pretty broke, just graduated from college entrepreneur to, oh my God, I'm a pocket millionaire is what I was, telling myself. And then, about 6 months changed, and my bank account didn't because the cash flow was all screwed up in this business model. And so that is when I first started to think about business storytelling through numbers. Was I was realizing that there's a gap between the story I was telling myself and the one the numbers were telling me. And so, long story short, in that business, there was a lot of ups and downs because we would basically be given these chunks of money to go chase down from the market with subsidies and other non-market solutions, and then they would go away, and you'd have to kind of get creative and scrappy to stay in business. And this went on for about a decade, but by the end, I got pretty good at a forecasting process to figure out when the ebbs and flows were coming, and ultimately to make decisions around hiring, firing, and growth marketing around that. And so that is one situation of a story where we really weren't in control of the cash flow because of the nature of the contracts of that business. But as I extrapolated that model, built Sustained CFO, and modeled what I had learned there, but now applied it to free market solutions, I realized that most entrepreneurs actually spend a lot of time on their numbers. It's just that they spend it in the wrong way, right? They spend it driving to soccer practice to pick up their kids, and they're thinking about, if we get those 3 checks, we can make that next payroll. If I get those 4 contracts closed, I can make that next hire. And they're thinking about it, but they're not putting it down. And so what I found was that a lot of times what they need is somebody else to talk to, and then to put those numbers and reflect them back to them in kind of a mirrored situation. And then that helps them if you also ask really pointed strategic questions to make decisions and do it with confidence. And even if they're not right, at least you know why you did it.
Yeah, that's really great. I mean, just being able to connect those dots of, kind of your, again, personal experience, what you saw, launching and growing that business into what you've got today. And I think, you're spot on in terms of the struggles I hear as it relates to the financial side of, any of the businesses that I'm currently engaged with or have been in conversations
Yeah.
with kind of throughout my career. Oftentimes it's kind of the winging it, so to speak, going from event to event, and then that's really when catastrophes kind of compound, right? Like we don't get those 3 checks that we were expecting. You and I got into a conversation via LinkedIn here, maybe a week or two ago, with somebody that kind of posted that question, right? Like struggling with how do you balance, these seemingly great customers who are long term, who also tend to stretch out payment
Right.
cycles, right? Like it's all of those things. So if we don't have a plan for it, if we don't understand what the forecast is, and then again, ultimately trying to identify what the variances are, right? We can really struggle to try to not just maintain, but ultimately grow that business.
Yeah, and I think we as humans, right, we rely on storytelling. We see it in social media that everything's kind of a story, but also, in business, I think we tend to have a couple of different characters that show up, right? The ones that have the gumption to start the business themselves, the ones that take it over from a family member, and there's plenty of folks that are maybe pessimistic out there, but you kind of have to have some version of optimism, which can very quickly turn into lying to yourself if we're being honest, right? Like believing something in the future that hasn't happened yet is a lie if it doesn't happen. Like,
Right.
especially if you told other people it's going to happen. I don't know if you ever saw the documentary on Fire Festival, but
Yeah.
I loved it because I was like, wow, like you're flipping back and forth between what a jerk, how could he do that? And you're like, I've said something very similar to that. Like, and you're feeling these emotions, but I think what the numbers do is they tie you back to reality. They tether you back to reality. And I don't ever like to put out the optimism of the entrepreneur, but rather kind of channel it and say, hey, this component of that optimism is for these audiences, and this component is for these other audiences, and then here are thresholds that if you hit them, it unlocks your dreams piece by piece, as opposed to just, hey, we're gonna go climb Everest today. What's the weather? Like I hope I have the right shirt and clothes and food,
Yeah.
because you're likely to die in that type of pursuit.
Yeah. No, I think that's I think it's a good insight from the perspective of, again, just what we were talking about in terms of that conversation and kind of how we as entrepreneurs, business owners, kind of evaluate opportunity, right? And if we kind of lean more on the optimistic side, where hey, this piece of revenue, maybe it 2x our business, right? But when we really unpack what the impact of that revenue is, and we start to tie that back to the kind of financial storytelling element, maybe we find that that's not providing enough cash to even cover the resources that are allocated to actually fulfill that that request, that customer, what have you, right? So it's like you get into this conversation oftentimes with yourself if you don't have somebody like you on the bench, or to a certain extent somebody like myself, where at least you've got now another person to kind of bounce these ideas off of that can maybe bring a bit more clarity around what the situation is. So
Sure, or at least
maybe let's
hold
go
up,
ahead, go ahead.
at least hold up that story and say, hey, this is what you said, it's going to happen by next month. Next
Yeah.
month, I'm going to show back up and replay that for you and ask you if it did. Like, and if we do this a couple months in a row, I'm going to tell you that you're not that good at predicting, you know, and then we'll change our assumptions. Go ahead. You had something else.
Yeah, I was just gonna dive in, like, to take that a step further, talking through, like, maybe some specifics around kind of tools, systems, things that as you're entering these businesses that are, kind of for all intents and purpose, growing and being sustained, but maybe are really struggling when it comes to, again, making payroll, being able to carry enough raw material to be, prepared for market changes, all of those types of things. What are some tool sets? What are some, frameworks? What are some things that we can talk about and help unpack for people that are really going to, give them that kind of, financial storytelling aspect?
Okay. I'm going to assume two things about our audience. You tell me if you think I'm wrong. One is that they're far enough along in business that they kind of meet what Dave, you and I have discussed to be kind of our client profile, right? They're making a couple $1,000,000 in revenue. They're not crushing the world, but they got, somewhere between $2 and $50 million in revenue coming in. The second thing is that maybe they didn't go to school and study accounting and finance. So with that being said, everybody knows, or they're told, hey, you got to make sure you clean up your books. Well, okay, somebody's got to do that. And so putting away those transactions, or transaction discipline, is kind of something I want to think of as a tool, right? And it doesn't have to be you, the business owner. It probably will be in the beginning if there's nobody else. But pretty quickly, you should try to think about handing that over to a bookkeeper to do that. The second in that stack would be a controller, and a controller would double check that work, build internal controls, and build some of the process function around accounting. Okay. So that's really important too. You don't have to have that in the beginning, but if you don't have that, what's going to happen is there's going to be these anomalies that occur over time, and they create these kind of errors that show up in your numbers, and they'll skew the story that you're telling yourself. And then if you've got those two pieces in place, that's great. Now you're kind of prepared for strategic finances, where Sustained CFO and our teams come into play. So what we bring to the table is a CFO packaged with a financial analyst to do some of the support work, as well as managing partners that bring some of that entrepreneurial network connection to the table. And what that allows you to do is go from driving the business forward while looking in the rearview mirror, which is what happens when you're looking at your checking account or you're looking at last month's numbers to make decisions. And now we can start to look out the windshield, kind of clean it off, look as far into the future as we can. We usually believe, quarters at a time, 1-2 years out minimum. Nobody can predict the future that much further out than that anyways, but sometimes it's good to know where, if this trend line stays, where will we be? Because that will determine economic value of the business, which might lead to raising capital or selling the business or buying other ones, or those type of things. So I know you asked for tools. Framework for understanding the accounting and finance stack, I think, is critical, because a lot of those words, bookkeeping, controller, and CFOs, are thrown together, and they're not the same thing. They're three different roles. And if one person is playing them, they're probably not playing one of the roles correctly. And if you're playing them all and you're the owner and you never went to school and studied any of them, or you never did any of this for another business, you probably are missing a couple things. But all right, now let's talk about the tools of the trade, right? You need to have a ledger of record. Some people call this an ERP. We're talking about QuickBooks or something like that tracks all the transactions, allows for reconciliation, where you're kind of triangulating the numbers by looking at two different accounts and making sure that they match up. And you need to be doing that consistently. I would say quarterly minimum. Monthly would be even better. Depends on how quickly moving the business is as to whether you need to do any faster than that. And then you need some sort of what we call it FP&A, that's financial planning analysis tool, that sits on top of the ERP or the numbers and gives you a forecasting mechanism. We use a solution called Giraffe, JIRAV.com, if you want to look it up. It's really built for accountants and finance folks like us, not really for the everyday consumer business owner. But what that does is that really allows us to quickly go in there and every month create a future view using the assumptions, the trends, and a bottoms-up drivers-based forecasting methodology, so that you're not doing this, that idea of forecasting, and you're also not doing the old, kind of 1980s, like, well, let's come up with a budget for the year, and then, well, week one, we're off track. Well, what do we do about that? And that's like zero cost accounting, that methodology. So we believe in rolling forecasts. We believe in having a bottoms-up drivers-based forecasting methodology, and we really believe in having the right people in the right seats. So I'll start with that.
Yeah, that's awesome. I mean, it's again, I think sometimes, and again, to your point, depending on where you're at, maturity wise, where you're at, kind of growth trajectory wise, how you've come into that particular business, right? If you've kind of come up the ranks, if you're part of a larger organization, right? So many different places, right? But the point I'm trying to make is just that oftentimes, depending on your maturity, skill set, all of the above that I just mentioned, right? We can kind of confuse these things. We can think that whether we're talking bookkeeper, controller, CFO, whether we're talking kind of specific frameworks within, a lot of that stuff gets muddied, right? Mm-hmm. For a lot of people. And I think even for these businesses that we're talking about, a couple million to 10 million for sure, and as you start to go up, right, the importance of having these foundations in place, it kind of, it can't be, kind of underscored anymore, right? Like when you're small, and you're figuring out, what does sustainable growth look like? How can I grow? If you don't have some of these foundational elements in place, right, you can really find yourself, on kind of the doors of closure relatively quickly for a variety of reasons, and not to fearmonger, but again, these are tools, and if we deploy these tools and we deploy these frameworks, right, we're more poised with not just information, but the ability to access capital, the ability to effectively manage and ultimately drive growth for the business, right? So maybe you could just touch a little bit deeper on some of the things that you've seen from your experience in terms of kind of reinforcing the point of why this stuff isn't just like, Dave and Josh,
Right.
selling something, right? Like
Right.
this stuff is critical no matter if you work with us, you do this stuff on your own. Like this stuff is critical to the
Yeah.
ultimate success
So
of the
I'm
business.
gonna tie in something else you have and I have in common, which we like to play the game of golf, and
Yeah.
I like to teach it. And one thing I say to my son, who's a very good golfer, but he's a 12-year-old, so he gets in his head about it, is anytime he hits a shot that doesn't go in the right direction, he gets all down. And I say, buddy, it's not you, it's physics, right? And the same thing plays out with business. Like I'm not telling you you're a bad person if you want to hold on to bookkeeping and try to do controller and CFO, but the marketplace will tell you there's not enough time for you to do that and grow your business to the scale that you're talking about, right? So like it's okay that for your first million you were the bookkeeper, but beyond that, what's going to happen is what I've seen is that finance usually is kind of the last seat that gets filled in. And that's okay in the beginning, but it's kind of the opposite. It's like now, as soon as you scale, the volume's going to hit finance first. And then what's going to happen is things like invoicing aren't going to go out. Now you're going to stretch your cash conversion cycle. Now you're not going to have the cash you've already earned. You just haven't collected it. And now you're going to have to go borrow money at not good terms because you told them you were making 3 million, but you only got 1.7 in cash last year. And you still got to pay the inventory for doing the 3 million. So like this is how it very quickly you get upside down in where the time is spent. And so, what I encourage folks is number one, be honest with yourself. Number two, bring in an expert, right? Some firm like ours, it doesn't have to be us. If you don't like, my color of my shirt or the way I'm talking, that's okay. But get somebody in there to help you. And also like use these things in a modern way. Like you might want the controller to sit in your office if they're touching payroll. You also might not want that. If there's touchy subjects, you might want them to be somebody that's, not necessarily offshore, but maybe somebody that's outsourced. Because
Yeah.
now you know
Third
that, like,
party.
hey, if there's touchy situations, it's not going to be brought up at the water cooler. There is effective groups that go out there and do offshore bookkeeping, but they have to have somebody overseeing them that understands GAAP accounting if you're heading that direction. So as you build these pieces and you put them together, that's just a blocking and tackling to make sure that you're minimizing every moment between you delivering value to a client and you getting the cash for that, because that is your lifeblood. Everybody knows that, cash is king, blah, 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 but it really is, because if you don't have it, you can't make the next decision. And then what I see occur, and this is for the entrepreneurs and the business owners out there that go, why do I feel so negative about when I hear the word finance, when I hear cash flow? It's because psychologically, it's holding you back from that optimism we just talked about. It's holding you back from making decisions clearly. It's holding you back from having the confidence that deep down this business is working, but there's something broken about how it's functioning because I can't get it to do the things as fast as the customers are willing to accept the value, right? And so that's where I get really excited. Some people get really, anxious. A lot of my clients will I'm like, hey, have a drink or, take a couple deep breaths or whatever you got to do to have our first meeting. Let's not freak out about the word finance. It's not a dirty word. It's just something you've been neglecting.
Yeah. That's such a great way to frame all of that. And kind of for me, it sets up this next question, but inevitably, you're going to hear something along the lines of, as we start to put what I lovingly refer to as infrastructure in place, for these things to again support this growth, right? You hear about, flexibility and I don't want to be corporate. And,
Yeah.
I mean, I hear that
Yeah.
from, $100+ million organizations that, just acquired their third, tuck in, right? Like, it's like, well, you guys got a lot going on. Okay. So, maybe talk a little bit about for the folks that are out there listening, maybe talk about what you see in terms of kind of balancing this idea around infrastructure, the things that we know we need to grow, and being able to allow flexibility within that as the market changes, as things inevitably change for a business, right?
Okay,
How does this
so
become the tool for that, right, is
right,
my point.
right. So I think the way I view it is, it's like the more disciplined you are with your accounting and finance, the more flexibility you have to remain creative as a business owner and entrepreneur. But if you went and took an accounting class in the 1950s and you went and took an accounting class this year, the book hasn't changed. Like, accounting actually is a multi-thousand-year-old practice, and it is about truth. If you actually get down to the basics of it, and we have a whole other conversation, a whole other podcast about the definition of truth and how it's slipping from society. But the one thing that's not, arguable mainly is, like, debits and credits. And so the thing I think that frustrates folks is that if you neglect this, the only way to get out of it is to climb every one of those steps that you skipped. Somebody has to do it. It's a cleanup project. And it's like, it becomes this kind of like, I don't know, messy bedroom, messy kitchen kind of,
Yeah.
okay, we'll just put a curtain up and nobody will see it. Like, no, everyone can see it, except for maybe you, because you're like hiding your eyes from it. But you can't move forward without that in place. And if you get that infrastructure in place and locked and loaded, what I hear from my clients is, man, they almost have this. I mean, we're all short time, right? It's the one resource that and they go, if I would have only done this 5 years ago, I would have been able to do this, this, and this. Or, man, this opportunity that came by, if I would have viewed it this way, I would have viewed it completely differently, because I didn't realize I had all these other resources. But what happens is, when you neglect finance and accounting, you're shutting down this truth and honesty about the business and its actual reflection of its value to the entire market. And therefore, all the opportunities that come to you are going to be viewed with this kind of like gray, muddy area of like, well, we can talk about it, but don't go look there. Don't look in that one
Yeah.
bedroom. And so that's the problem. That's the problem that folks fix with bringing in strategic finance. And what happens, I think the other side of this is that society is celebrating a very different version of this, which is more the unicorns from Silicon Valley, which is also like not really based in truth. There's a lot of just kind of like, I don't know, you got somebody excited and, they it fits into their portfolio and they're going to flip this thing to the next PE firm. And so it's like, we hear these two versions of it, of like, somebody who doesn't deal with their books, but once a year with, receipts in a shoebox to the accountant. And then this other one who's like, they just raised, $50 million on a cocktail napkin. And you're like,
Yeah.
I got to be somewhere in between that. And the truth is, like, yeah, there's pretty much the entire world is in between that. And come join us and we'll get you on track. And you're probably not $1 billion company, but you're also probably not, going to need to go out of business if you can just collect the cash from last month.
Yeah. Yeah. Yeah, I mean, so much great in what you just said, and one point specifically like that I find kind of ties this idea around some of these unicorns, and especially the stuff that you see today with a lot of SaaS and product launches, but it's this idea around your customers have to have some confidence that as they're purchasing from you, that you're going to be around.
Yeah.
Right. And so when you don't have some of this financial integrity and infrastructure in place, and they put their trust in you, right? Like, you've got this scenario where you've got an opportunity to kind of lead with a lot of these things, having to your point, like having a strong balance sheet, understanding where your cash is coming from, just positions you so much stronger, both from a customer facing perspective, internally, to be able to do things to take care of your team and make sure that they're there and ready to go. And then again, also as opportunities come in, right? Like, wouldn't it be great that, XYZ company goes up for sale, or you have an offline conversation at, a business roundtable that, boy, I'm thinking of exiting in the next couple of years. Well, now you not only understand, but are potentially poised to, go ahead and look at that opportunity from a real standpoint versus, again, kind of just this general idea of, I think, I don't know, maybe it makes sense. Like
So,
maybe we have the money to do that.
I think maybe I've been shining too much light on things that might be wrong. I think there's another version of this, which is more of um, the conservative approach to business, right? The one that says, I'm not going to take in debt in the beginning, and maybe even like, I'm never going to take on debt. And they grow this business so well because of that discipline that they get really large. And now they're competing at a multinational global level where there's a lot of factors, right? Like there's currency variances and things like that that could be weighing on their supply chain. And now like you're playing in a levered space, and you're telling yourself, I will not participate in that version of the game. And again, that's a personal decision, and it may be the right one for you, but you may not be able to hold that truth and one that you're going to get to whatever $100 million number that you want to head
Yeah.
towards. Because, you can say a certain size and compete in a certain market, but once you get to the next pond where everybody is, levered effectively, or to your point, there's an opportunity there to buy this business, and you're like, dude, I can see this cash flow. I mean, this thing would pay back in 4 years, but we don't have quite enough cash flow to buy it with our own. It's like, well, look, they make this thing called a loan, and you can get this, and that person actually might even be willing to sign on it, and might be even willing to finance it with some of their own equity. Like, there are deals that can be done if you understand what different ways you can put the cube back together. And that's where you see, I think, these really great stories of folks that kind of like unlock this mentality of like, well, we were here, and then we kept growing steadily, and then we kind of like opened our eyes to what was possible, and then we like skipped, hopped, and jumped 10x. And that's totally doable, but probably not at just an organic clip, non-leveraged. And so those are some of the conversations we have where we get these really exciting, upside wins that occur pretty quickly.
Yeah. Yeah, I mean, and to that point, right? Like I touched on it in kind of the beginning in terms of the overlap here, but that's the point that it gets exciting for folks like me, right? Because we can kind of do all of the things that we want from a kind of optimized operations perspective, right? But at the end of the day, if we don't have visibility over cash, if we don't understand, how we're ultimately trying to, pull those levers to grow the business, right? Like we can only do so much, right? We got to get out to market. We got to market, right? Like we have to have a large enough sales team. Maybe we have to, deploy some resources there if that's an opportunity to expand, right? So again, just kind of tying all of this together. When we have that infrastructure in place, when we're going to have these conversations, understand, what levers we need to pull. Now we're starting to, again, kind of work together, collaborate to really, turn on the rocket.
Well, this is where I love working with guys like you, Dave, because, we are all details in the numbers, and we can help set them on this trajectory and, raise X number of millions of dollars or get the right financing in place for that building expansion. But now you actually got to multiply the ground force and go from 50 to 100 or 100 to 200. And the systems that you had before are probably going to break down when they used to be, whispered from one person to the next. But now you're, in a different city or zip code or whatever it is. And now you need process, procedures, standard operating things that you bring to the table, right? And your brain and the way it works is going to see those bottlenecks and fix those. And then that, creates efficiencies and margin and all these other things. It comes back to us and goes, okay, now how do you reinvest that money? So there's really this like nice seesaw of like, okay, we got the problems, we'll fix it. Okay, now you got the problems, and it can go back and forth. But I think what happens in the one business owner's mind is their sales, their finance, and their operations. And you can read a great article about the conflict between sales and operations, but usually you just neglect finance and just don't even assume that's in the conversation. But if you get all three of these to work together, right? And marketing and sales is obviously the loudest one publicly.
Right.
But if you get all these working together, there really is something, beautiful in the music that it can make. And some of them are better to be somebody that needs to be on site, and some of them are better that it might be a third party that, you can at least feel like if you fired them, it wouldn't be the end of the day. But at the same time, like, they're going to talk to you as if they were an owner, but at the same time, they're not going to be at the holiday party.
Yeah. No, I love that. I mean, it's like so many things I say, right? It's all simple. None of it's easy. And, getting those, three cogs, three disciplines. But, to your point, getting that kind of wheel turning, it really is just one right after the other, because as soon as, we've kind of closed the gap here, it very quickly, shifts back to one of those other two disciplines. So, that's the secret, right? Like, if we had to sum it all up, right, that's the secret. Get those three things working, and, sky's the limit. Literally, sky's the limit. And I know you've seen, kind of that rocket fuel trajectory. We have a couple of clients that are, in that groove right now. And it's just, there's nothing cooler than to see it, to, have conversations with the folks that are living it, hearing things like, gosh, I'm so bored today. Like, all the normal stuff that I've got to triage is, taken care of. And I actually have time to sit and think and be strategic about certain aspects. So, are there any things that maybe we haven't covered here that you just feel compelled to maybe share for the folks that are out there?
It's not too late, no matter what your financial situation is. I mean, even if it is dire, and even if it will end with a loss of the business, there are ways to go out of business positively. I can tell a personal story on a different podcast about that. I've gone through bankruptcy. It's actually a benefit to society that we have that. Many countries don't have it. It's not the worst thing in the world. Yeah. There's an ability to reboot off that. And I think the other one is that there are people like yourself and myself who we might be a little flippant on this podcast about these topics, but if we get to meet you, like, we're going to meet you right where you are. And because you're dealing with guys that are, second, third generation entrepreneurs, we get it. We're not your corner office suit from Wall Street coming in, scoffing at you because your margins are single digit. Like, hey, that means there's more opportunity for growth.
Yeah.
So, we'll meet you where you're at, and it's not too late. And I think, now is probably, other than yesterday, is the best time to to get in touch with somebody who can help you, accepting some help and reaching out. And just a starting point. We're not hard sales guys. I know that about you and I, but most of the folks in the industry just want to help.
Yep. No, I would say, again, outside of us, most people are willing to have a conversation to help folks kind of get, a handle, get their head around where they're at, and then, wherever it goes, right? So no, I love that. It's never too late. Yesterday would have been better, but today's just fine. So that's great, man. For folks that want to reach out to you, where's the best place for them to find you at?
Find me on LinkedIn. If you just want to connect, sustaincfo.com. You can go ahead and schedule a financial consultation, 30 minutes. You'll be joining me on a Zoom call, and we'll meet you where you're at and talk about what's going on. So, yeah.
Love it. I'll make sure to put that stuff in the show notes for everybody, so that'll be easy for them to find. And Josh, man, thanks so much. It's been a ton of fun, this conversation, but it's been great to get to know you over the last few months, and look forward to lots more conversations with you.
All right, likewise. Thank you so much for having me.
Thanks.
Bye-bye.
Thank you so much for listening today. If we brought you any value, please rate, subscribe, and share our podcast. Also, be sure to connect with us on social media by searching @The Crysler Club. Until next week, I'm your host, Dave Crysler.